Good morning, everyone. This is Teddy Kekstadt from Forex Trading Unlocked, and we're here today with a Forex market breakdown for you. And before we get into everything, we just want to pull up our disclaimer here to remind you that this webinar is for illustrative purposes only. All right, so let's start off with our economic calendar, and boy, is it bare. After having literally 2 months of crazy central banks, and obviously there's your monthly economic numbers. The only one that really is going to pertain to the Forex markets and the currencies this week, or for the remainder of the week, rather, is tomorrow's U.S. GDP number. Obviously, GDP is one of your bigger economic numbers. There is other things going on in the world as far as speeches and things like that, but they're more geared towards political and just geopolitical stuff, that it's more noise and canceling. It's not about anything being decreed or set in motion. So as far as the fundamentals in the marketplace, we're kind of in a spot where we haven't been in months. Actually, we have a week that even the beginning of this week, nothing is really major. So it's more relying on technicals. So with that, let's get off this calendar page. And let's start off with one of our biggest currency crosses, the euro US dollar. So what has we got going on here? Well, we're waiting for a breakout. The market's obviously been trending lower from the summer into the fall, and as we headed towards the end of the third quarter, and it's really been consolidating. Now, if you look at these two yellow lines, those are our major up and downside pivots as far as waiting for a breakout. Above 111.07, that would be making higher move highs, and it would also be breaking the downtrend that the market's been in for a few months. Basically, this market's been sideways for a year, but in the short run and the intermediate term, obviously it's been under pressure. Now, if we get a breach of that 111.07 and start to get a little bit of a bullish move, I wouldn't be over confident that the market is turning. I think it would be just more of a bit of a strength in the euro overall that probably could be happening, especially as we start to head in towards the last few weeks, going in towards the Brexit announcement or Brexit move, whether it's hard or soft or whatever, not going to be extended. I don't know right now. That's why we didn't talk about anything on the calendar, because it's too confusing and doesn't mean anything. Now, as far as below that 109.27 pivot, that's our failure, which would mean a lower move low, and that would be also a continuation of downside momentum for the euro US dollar currency moving into October. Now, do I think that's going to happen right now? I don't think so. Right now, we've been sideways. If you look at the range over the past week and a half, you've been trading in just over $1 range, where, I mean, every day it's like it's up one day, it's down the other day, and the bodies of those days are just, there's nothing to be seen there. So we have this little elliptical area here. So even if we go sideways and we take out this downward sloping blue line, which is downward sloping resistance, that doesn't mean it's a breakout because of taking it. That's just by attrition. And then also, if it's contained within these pivots, we don't have a higher move high, we don't have a lower move low. So just on the basic, easiest fundamental technical, there's nothing to go with. So for range traders, you may be looking at a really nice window for the euro US dollar for the next upwards of maybe a month as we head into the fourth quarter, and also the end of the Brexit deal. And that's something you have to think about. As Brexit, whether it does or doesn't happen, we're getting closer to where the euro and the pound may start to really consolidate, and it might start winding into a range trade. So be very careful trading the trend or any type of anti-trend move, actually, as far as how much volatility you'll get. Now, that anything can happen, obviously, we can get a major bounce in the euro US dollar and the pound or whatever. But right now, in order for the euro US dollar, I think, to get any really major traction to the upside, you would need to have weakness in the US dollar. What would do that? Well, it could happen with as far as the GDP number that comes out tomorrow, but that would be a short-lived move, not something that I would look at on the long term. So as far as with this chart and for euro US dollar traders, if you are a bull and you're looking to buy into a dip, I would say then, as long as you're somewhere above that 109.27 pivot there, you're fine. Anything below that, I would be very, very cautious. Being a bull, I think you'd be, well, you're obviously going to get buried by the momentum of the trend that's in place right now. And then also that would also have us buffering some really key support in the euro US dollar, which gets us down towards that 108.5. But that's only if we take out this 109.27 pivot. So outside of that, I think that you have to keep your trading tight. If you're already in a position, just work it and use those pivots as something to base off of, maybe perhaps for risk parameters. But just look at what the chart is already showing you. It's been very sideways. It's been very tight. There's not much movement overall in any day's trading. So with that, let's move on to our next chart. Now here we have something we can talk about. So we have, this is a current chart from just before this webinar was taken. Today we are making newer move lows. So it looked like the market was consolidating for the British pound US dollar. But now we have definitely confirmed a weakness in the trend, and at least a corrective move is in place right now after today taking out the low from a couple of days ago, over the past couple of days. Now we have back here set on Friday, we have a Japanese candlestick pattern, which is called dark cloud cover. So that's typically when this occurs, you have typically a short-term break in the momentum of whatever is going on as far as the bullishness in the market. Now, does it mean a total change in trend? No, not necessarily, but it does usually indicate a point where you're going to have a little correction. And right now, that is occurring right now. So with this signal, we have three pivot prices for strike prices that you can look at as far as risk levels for both being a bull and a bear. Now, if you're a bull and the trend is your friend, you got to remember the upside momentum is definitely here over the past month. If you're looking to buy into this trend, you might be setting up for a good buying opportunity. So where would you look? Well, right now, obviously, the market's going down, so you'd be looking to buy possibly lower. So right now, if this correction is going to happen and it's going to continue, and this downside momentum will continue, the projected price with this signal here will take the 50% of the total move from this low to this high. So that would put us down at this 122.63 area. Now, what's the likelihood of the pound US dollar getting down towards that target? Well, it doesn't take a lot of US dollar strength to have pound weakness, because we know that with the Brexit deal, things obviously were getting closer to the October 31st deadline. But also what happened this week was that Boris Johnson was overturned by their Supreme Court equivalent, and now Parliament is back in action. So that's probably why we have this current sell-off, especially with today, because today was the day that Parliament went back into action. So what's going on there? What does it mean? I don't know. I'm not from the UK, and their politics confuse me just as much as ours do. So, but what I do know is that most likely that the sell-off is because you have a changeover in power. Boris's power is now restricted back to being prime minister and not being able to act without the restrictions of Parliament. So does that mean that this market's going to totally tank and go ahead back and take out the lows from early September? I highly doubt it. I think this means that the momentum that Boris Johnson had going in towards this Brexit deal has now started to wane. I mean, after all, the beginning of September up to through this rally, this was all because because of the proroguing. That means to suspending Parliament. So now that that is now canceled, you have to assume that probably whatever was built into this bullish momentum with what is going on with the UK and Brexit, there's going to be a little profit taking that's probably going to be happening here. So with that being said, let's look at these levels. If you look at these green pivot lines, we have $1.2475, $1.25 quarter, and $1.2575. So these strike prices are right within the range of this sell signal that occurred. The last one is just below the high. Now this high would be your risk level if you are a bear. Anything above that means the sell signal is over and it's or it's negated. So right now, how far does this sell signal going to go and take this market lower? Well, who knows? I don't know. Everyone has their own different price projections, you know, formulas and what have you. I just use the 50% level here as an arbitrary target, especially for a correction target, because it falls just into this area where we had a consolidation of highs and lows, and there was a breakout area. So that looks like a good pivot area for the market to fall down to. Especially now, it also fits in with the political stuff. So this is something where you can use a signal like this also to incorporate. So if you had, let's say you had some sell signals in your own methodologies that are going on over the past few days, and especially with today's break. So the risk levels I would look at now are these strike prices at $1.2475, $1.25 quarter, and definitely $1.2575. Anything above $1.2575 is definitely very strong for the longer term trend. Anything below that right now, I think, is yeah, definitely resistance until we start to show a turn. Now, right now, we are making a lower move low on the daily basis, but on the overall trend, we're just in a short-term correction here off of this high. So right now, we had made a higher move high. The key is today, can we take out this low from over here as we are building up? If we still continue to make lower move lows today, and especially start to settle lower towards this 123.5 area, I think that you're going to see a continuation of this momentum, at least probably for the next couple days as we absorb what goes on with Parliament. You got to remember this. I don't know how much action they can do within one day or how things work over there, but I would assume that today, tomorrow, and into Friday, they're going to be very busy over there, and it's going to be a political hotbed as they really start to hunker down on Brexit and also the Prime Minister as well. So I don't know what kind of retaliatory or cohesiveness is going to arise from that, but I think that you can probably bank on the fact that the British pound, even if they have good economic numbers or whatever, which there's really nothing coming out this week, there's just central bank speeches. I don't think you're going to see any strength coming out of this week with this. It would only be if there's US dollar weakness that I think you'll see a lift. So the downside target here, folks, remember, is this $122.63, and then as far as our pivot points, you use those green lines right there at $1.2475, $1.2525, and $1.2575. Those are kind of your buffers. If you were to take out, like I said, those three pivots, those strikes right there, then you're going to look at an overall bull going on for probably into the rest of October. And if not, and this is a corrective move, then this could be a nice little opportunity for bulls to buy this market down and then ride the trend higher if you're overall a bull. And if you are an aggressive short term bear right now, you have a good opportunity where you know where your buffer points are, and where you have at least a decent target level also from this area to capitalize on as far as a move for the bears. Now, if you're a real big bear, I'd be very cautious though at once you get to this downside target area, because if this is just a correction, then the bulls are going to really snap it back as we head into that Brexit timeline in October. So one thing you have to watch and remember is the dollar index that can help you with the US dollar strength and weakness, and also maybe help guide you with this trade. So now let's go to the US dollar Swiss. Now this kind of helps us with that British pound US dollar trade. We have another signal that went off last week, excuse me, in the US dollar Swiss market, and that is a bearish engulfing line. When you have that, usually that's a good indication the market's going to start to pause and not necessarily completely reverse gears, but it usually sets you up for a correction, which it has already. And right now in today's trading, it looks like it's pausing. So we do have some downside targets here for this. Now, the overall trend for the US dollar Swiss has been up for the past month and a half. And also, it has had some violent swings to the downside. Now, this recent slide that you can see that has occurred over the last few sessions has definitely been a nice little correction. And it's heading down towards this lower blue line where its upward sloping support is. Now, I think that you see this first T1, target 1 at 98.20. This is also where it comes in with this upward sloping support. It's a really good, strong area here where is it going to bounce? Well, if it's in channel and it's going to continue to channel higher, most likely you're going to see a bounce off of this blue line somewhere. Now, if you see a failure here, now you gotta see this new low that was set yesterday, that made a lower move low. So we have a higher move high where this bearish engulfing line came into, and then yesterday we set a lower move low, which definitely makes this market look like it wants to correct. Now, if it's in corrective gears, then we have a good chance that we can probably see this T1 get taken out and then probably get into this downside target range, somewhere hovering around that T2 area, around 97.82. Excuse me. Now, is that overall bearish for this market? You got to remember the U.S. dollar Swiss has been in a bearish market for a while. It's only been in a corrective sideways to higher trade for the past couple months. Now, that probably has a lot to do with U.S. dollar strength and a lot of EU weakness that has occurred. But the problem is, look at where we fell off of. This bearish engulfing line sell signal was right below parity. Now, whenever you hear parity in the currency environment, people are right out off the bat think about the U.S. dollar Swiss. One of the reasons is because the U.S. dollar and the Swiss are the two flight to quality currencies out there. And when you have a relationship like parity, it's usually indicates there's a divergence of other major currency crosses, and that's why that's occurring. So the fact that we have another rejection, once again, this has been multiple times now this year where the market has either just got above parity or has fallen short of parity, and it's reverse gears and headed lower. So that being said, you have a economic fundamental psychological number that we failed to reach, and we had the sell signal. So if this is a corrective phase that we're beginning, then as we go into Brexit, this is where you got to remember, US dollar may be strong, but the Swiss right now, because of Brexit versus the euro and also the pound, may begin to start to become a very big bull. So if that happens, you're going to have a divergence of many currencies that have been trending either bullish or bearish to dollar over the past couple months, and we're going to see a flip. One of the currencies with the highest probability to have this happen would be the Swiss, and we may be seeing the beginning signs of it over these past few sessions. So we have these three strike price lines here at 90 binary lines at 98.75, 99.20 quarter, and 99.75, which is just below the high that was set last week. So I would say that those strike prices are going to be key pivot levels over the next probably week to 2 weeks, and definitely this week. So is this market looking to bounce and get back towards that high and make a run? Well, right now I would say the trend is your friend, and the short-term trend is a bear. So I would look for a test of that 98.20 area and look for a consolidation there. Now, a failure of that upward sloping blue line, that is a good indication that this correction is more than just a short-term, correction to maintain this obviously bullish channel that it has been over the past month and a half. So that puts that 97.82 as a very likely target over the next week or so, and then it would be a nice indication of where do the currencies really start to fare when it comes to moving towards Brexit. We have to start thinking about the Brexit trade, because hard, soft Brexit, extended deadline Brexit, whatever, is definitely going to shake up the euro, the pound, as well as the US dollar. So if those three are shaken up, that means the Swiss also will be shaken up. But as far as a European currency, the Swiss may become the flight to quality, even though the dollar's flight to quality because they're all a mess. The Swiss in that zone will become flight to quality. So we might be looking at a divergence trade, which will set this US dollar Swiss to really start to trend lower over the next not just a week or so, but over the next month and a half, where we could start to see the market take a dive down towards 97.29 and even come below where we have this target range. and lower pink pivots. So these are areas that you definitely want to key off of over the next couple weeks. This is going to be very interesting how it starts to pan out. And it's kind of funny, you can start to see on a week like this where you don't have a lot of numbers coming out that matter for any of the individual currencies or all of them, what have you. This is where the technicals start to come in. You can almost see how big money is moving around. So because it's always moving no matter what, it's acting and reacting to whatever it's doing. But the bigger momentum right now, obviously, is the bears, and the bears have taken over this trend. This is the first correction in the US dollar Swiss where we've had, you have the signal once that touched it up, but then you have 1, 2, 3, 4 down days in a row, and today we don't know what's going to happen yet. Today is just a kind of a pause for the cause. Since there are no real numbers, we may be kind of in a dead zone trade for the next like 3 days too. It may not be very volatile because there's no reason for the markets to move right now. So then if they're thin and volume is low, especially since we're heading in towards the end of the third quarter, you got to remember that, you know, Friday is the end of the third quarter. So, or we're coming into the end of the third quarter rather. We're looking at the balancing of funds, you know, banks and what have you. So the question is, have they cleared their balance sheets for what they want to do for the end of the month? That may be an issue too that may compound the slide. So I would key off the dollar index also for this currency. And definitely if the dollar index is looking weak, you're probably going to see a little more upside momentum for strength for the US dollar Swiss, which means that this market will continue lower and giving those T1, T2, and T3 target areas a better chance of being reached. Now, over the next couple days, is it going to happen? I don't know. It looks like right now there's a good chance at us testing that upward sloping support line. So key off those pivots and remember that especially above the 99.75, any rally above there is, besides a nice show of strength, puts the market targeting parity again. But we had a rejection, like I said, so it looks like parity is not going to happen, and now it's time for the bears to take over and see how far they can drag this market lower. Okay, so now let's look at our next currency. Now we come to another side of the globe and we're looking at the US dollar yen. So now we have this question, is there US dollar weakness happening now against the major currencies, or is this just where we have divergence? Now I would say that probably what we have is divergence. Remember how we talked about the US dollar Swiss being in an overall bear market with just a short-term rally, well, since the summertime or end of the summertime. Well, that's also what's occurred with the US dollar Japanese yen. Ironically, also look at that. There was a bearish engulfing line that occurred there. So, and the market has trended lower for the past few sessions. Today, obviously reversing gears in a big way. Now for this market, we have downside targets of 106.499, 106.047, and 105.380. Those are fib projections. The downside target area in that ellipse would be a good target range, just because if you look at the bulk of trading that happened to base this market and pop it up for this rally, that would be right in the heart of it. So this market is kind of in a sideways trade if you really look at it over the past few months. But the overall market, like I said, the longer term trend is a bear. So maybe this is a corrective move that to the upside that is now ran its course, and it ended with this bearish engulfing line and is setting the beginning of a new corrective wave, not just a corrective wave lower, but a trend move lower, meaning that the US dollar yen may become a bear for the next not just a couple of days or weeks, but maybe over the next couple of months. So if you're an aggressive bear, then I would say if you look at these strike prices at 107.75 and 108.25, those are good levels for the bears to look at. Now, if you're a bull and you're looking for an aggressive buy, then those would be good areas to look at, because if we take it above 108.25 again, then that means the bearish engulfing line sell signal already had run its course and didn't get to where the more likely target had been, and that the upside momentum is there, and the US dollar is very strong, which would mean that higher move highs would be on the agenda, and we'd be looking to probably go way above that 108.25 area and target the 109 back up to 109.5 area. Now, could that happen? Absolutely. The US dollar has been strong for months, and no matter how this, it's kind of funny, no matter how they try and break the dollar or the euro, you just can't. The euro, even though it's been sliding, it just doesn't want to really collapse or can really trend lower. It just keeps just nibbling away at support, grinding at it, and then getting small bounces. Now, the US dollar yen, if the overall bear trend is really coming back into place, then that means that this nice little rally that has happened with the US dollar yen has run its course and is now beginning a turn, which gives any type of aggressive bears a good opportunity to ride a very good trend lower, which, you know, if we get down towards that target 3, especially down at 105.38, that's a very nice move over the next couple weeks to capitalize on. Now, as far as being a bear and a bull, once again, we have these two strike prices there. I definitely think that if you're a bull, then you're looking at right now, we're looking kind of at the end of a corrective move lower, and this would be probably a good buying area. But think about the steepness of this trend too. If you look at the low that was at the end of August that we've rallied off of up until the last week, that was a very steep trend. You know, to go from 104.5 all the way up to 108.5, a $4 move in the US dollar yen over the course of a month, a little over a month, without any major real things going on between, especially the US and Japan as far as trade and what have you. I mean, there's been some little tariff tit for tat stuff, but as a whole, everything actually has worked out well, especially for the US and the US dollar. So there's no reason for it to have been in the bear trend like it has been for a while. But then remember, even though the US dollar is the biggest currency out there, sometimes some of your other crosses don't trend the way some of the other ones do. Like the euro and the pound have been under pressure from the US dollar. Obviously, this has not been the case for the yen and for the Swiss over the past year. And then also you got to think about the gold trade. There's been a lot of action in gold and also in oil. So when that happens, that causes a lot of volatility in the Japanese markets. It makes it hard to gauge their economy because they're very reliant on oil, for one, for production and things like that. So these are things to take into account, because we've definitely had, you know, those issues that occurred a week ago. They seem to have, at least in the short run, stabilized. So I think that part of the trade is off the table. But as far as today, we have a nice show of strength in the US dollar. So for your bulls, if you're looking at those strike prices, then those things may be coming in much sooner than later, and this little sell-off that we have may have run its course. But right now, I would say that with the bearish engulfing line, though, that we have, that momentum probably still is going to give this market a little bit more pressure down towards at least that 106.4999 first target level. After that, you're at the top end of that digestive zone that the market had been in when it based. So if this market is truly bottoming, then we should start to find support where, you know, earlier we had a lot of resistance. So then that T2 and T3, that's not going to manifest itself. So for aggressive bulls, I think down to that 106 area, you're good. Anything below there, I think you're cannonballing yourself and trying to fight an overall long-term bear that is, you know, not the right thing to do. So I would look more, if you are a bear, I would look for selling opportunities if you're not in the move already. And if you're a bull, then I would still wait for a signal, especially a rally back above 107, that first green strike price. If we get back above there, that puts us in the channel, you know, the ability to start making a run for those highs. Remember, on a fundamental basis, we just came off of higher move highs with this bearish engulfing line. So bullish momentum is in place over the past few weeks, you know. And then we did make a lower move low because if you see back on this chart right before that high, there had been a higher move low. So we have a higher move high with a lower move low, which means not necessarily a change in trend. It just means a pause for the cause. And if this is just a pause, then I'd be careful with this rally today. It may be the beginnings of a bullish spark that's going to have this market flying back up through those strike prices and making higher move highs. So you never know what can happen. Those are the pivots and the areas to take a look at, and you know, especially since we have these nice sell patterns from these Japanese candlestick patterns, if they coincide with your sells, if you were on the sell bearish mode because of any indicators or analysis or fundamental forecasting you do, then you know you have this this signal that still has a little bit of potential life in it. And also, if it does reverse gears and take out the signal and it doesn't reach its target, that's a big signal also for you that momentum obviously is in the opposite direction, and that trend is much more solid than had originally been thought. So with that, key off those key pivots, and make sure that you always do your homework and look at the markets, weigh your potential trades, just like we did here. We had those signals that gave us a reason to have a course of direction, as well as to know how to manage our risk with levels very easily and quickly. And if you want to learn more about that, you can always find stuff on my website, www.forex-trading-unlocked.com, or you can find out more about some of the signals when we do some videos on our Twitch TV channel. Also, you can find us there. And then if you want to learn about these signals, you can read about it in High Probable Japanese Candlestick Patterns, available at Amazon.com in paperback and Kindle version, and you can learn how to utilize these buy and sell patterns to integrate, whether you're an options trader, an outright Forex derivatives trader, or a futures trader, or you can be even other markets. They work in other markets as well. So I want to thank you for your time, and the Nadex as well. Good luck with your trading, and see you next week. Take care.